Hello, investor. So today I want us to look at if you can actually earn enough with dividends and how much you need to invest to make or to earn a good passive income from the dividends. All right. We are going to take an example of one of the best paying dividends here in Kenya. We work out the calculations and find out what we actually need or the amount we need to invest to make that good passive income from the dividends. In our previous video, we saw that in a list of the best paying dividends here in Kenya, BAT, that is British America Tobacco Kenya, a company that is well known to many of us, was number 3. So today we are going to use it as an example so that we understand how much we may need to invest in British America Tobacco Kenya so that we can earn a good passive income from the dividends. Yeah. BAT have had steady and stable dividend income over a period of time. We will look at the amount of dividends it has offered over a period of time later in the video, but our major focus is on the calculations, and we are going to also include the brokerage fee to get the exact amount of money you need to invest. Okay, also remember, shares are a long-term investment, and in addition to dividends, you also earn through capital gains. This is when you buy, let's say, maybe at 10 Kenya shillings, and then that is 10 Kenya shillings per share, and then you sell the same share at a different price, let's say 20 Kenya shillings per share. So the difference between now the 20 and 10 Kenya shillings, so the 10 is the buying price and the 20 is the selling price. Now the difference now between 20 minus 10, which is 10 Kenya shillings, is the capital gain from the shares. So in addition to the dividends, you also get to make money from the capital gains. All right, and maybe to those who are new in shares, dividends are what you get to earn when the company that you have invested in makes some profit. So every time that they make profit, they distribute these profits, a certain percentage of the profit, to the investors or to the shareholders. So if at all you're a shareholder, you have bought shares from a particular company, now for example British American Tobacco, you get to earn a certain percentage from that particular company every time that they make profits. Okay, so at the beginning of this year, that is 2025, BAT announced a final dividend of 45 Kenya shillings on February 24th, 2025, with a book closure of 23rd May 2025, meaning if you got in that particular, or you bought those shares before 23rd May 2025, you are eligible for a 45 Kenya shillings per share dividend, which was paid out on 25th June 2025. Okay, and now we are going to be using this to make some calculations to see how much you needed to invest to get a good amount as the dividends. Okay, and now I want us to use this the final dividends that they announced in February 2025, and they paid it out in June 2025, to find out how much you needed to invest in these particular shares for you to earn a good amount of money from this dividend. And I think to even make this video more exciting, we are going to also look at if those people who joined or who bought shares before 23rd May 2025, we want to see whether they have actually made any capital gains or they have made money through capital gains, because we know they made money through the dividends. Now we want to know if they actually made money through the capital gains, and we are going to look at some charts later in the video. So make sure that you watch till the end so that you can look at that as well. Welcome to Study of Wealth, where we are guided by the philosophy that you have to study to become. We have to study wealth to become wealthy. My name is Susan Juguna, and here we discuss anything finances with a goal to attain financial freedom, money working for us, having enough money working for us to sustain our lifestyle. If that's something that interests you, make sure that you hit that subscribe button. Okay, now let's get to these calculations. Now, to make this seamless, we are going to start with an example of amount we would wish to earn from the dividends, and we will start with maybe 5,000 Kenya shillings. We do 10,000 Kenya shillings, and we also look at 50,000 Kenya shillings. Now we look at how much do you need to invest to earn 5,000 Kenya shillings, 10,000 Kenya shillings, and 50,000 Kenya shillings in dividends. Okay, and then I would like you to tell me whether it's worth risking that amount for that kind of dividends. Okay, And I want you to keep in mind that investing in shares carries potential risk, and the market can sometimes be very volatile. So in as much as you're earning from the dividends, you want to keep in mind that you're going in for the long term, so that you make sure that whatever you bought, for example, if you bought the shares at maybe 300 Kenya shillings, you're selling it at a higher price, let's say 370 Kenya shillings, to make sure that you have earned in both the dividends and at the same time you have earned in the capital gains. Because sometimes you can earn the dividends, maybe you earn 10,000 Kenya shillings, and if the market has gone down, you end up losing whatever you earn from the dividends. So make sure that you stay long enough to even appreciate, or to your capital to appreciate to a higher number, so that you're not exiting at a loss. Okay, so first we will need to calculate the number of shares we will need for these. Then from there we will calculate how much money we will need. So to earn 5,000 Kenya shillings at a dividend of 45, you will need 112 shares. For 10,000 Kenya shillings with a dividend of 45 per share, you will need 223 shares. And for 50,000 Kenya shillings as dividends, at the 45 Kenya shillings per dividend, you're going to need 1,112 shares. And this is basically dividing 5,000 divided by 45, okay? Yes. And now we are going to proceed to calculate the amount of money we need for each amount. To get this, we will need to multiply the price of the shares with the number of shares, okay? And the price of one share for the BLT is 370 Kenya shillings at the time of making this video. And guys, I have to say this here. I have to digress for a minute. I have been doing a lot of research in ETFs, and you guys, ETFs is on another level of investing, and I find it actually I'm thinking it's even better than investing in individual stocks. And because number one, they're diversified. When you're investing in ETFs, you're investing in a basket of individual stocks, okay? And it's less volatile, and it has massive potential. I'll be sharing more on ETFs, but I want you to let me know in the comment section whether you're interested in this topic, because I think it has massive potential. No wonder people like Warren Buffett advised some people, Berkshire shareholders, back in 2013 to put 90% of their money in index fund and ETFs. I know that 90% is a very big percentage, and he had a big reason to tell them this. And I also understand that the largest amount of his portfolio is in index funds and also in ETFs. So let me know in the comment section whether this is a topic that you might be interested in, so that it also motivates me to actually go deeper into understanding, or to bringing you more information about exchange traded funds, because I think it has massive potential. Yeah, so let me know in the comment section, and let us discuss that as well. In addition to you having individual shares, you also need to have ETFs in your portfolio. That one I'm convinced, 100% convinced, because of the diversification. And if you know me, if you have been listening to me, you know I'm very big in diversification, and an opportunity to invest in a diversified portfolio, or an already diversified investment, is actually even better than investing in individual stocks. Okay, so make sure that you comment if you're interested, and stay tuned for those updates. Okay, let's now continue our discussion. Now let us include brokerage fee to get the exact amount of money required for you to get these returns. And before we do this, I would like to mention that amount issued as dividends change year after year, or it depends with the particular year that you're talking about. For example, last year, that is 2024, BAT issued 2 dividends. That was an interim dividend of 5 Kenya shillings and a final dividend of 45 Kenya shillings. In 2023, they issued a dividend worth 57 Kenya shillings. 2022, they issued a dividend worth 55 Kenya shillings. So this is to show you that dividends change per year depending on the performance of the company, and it is not a guarantee. Dividends are not guaranteed. So make sure that you check the company performance, check how the company has been issuing dividends, so that you know, or you can maybe see a pattern, because it will always have that pattern of how it has been performing. Okay, now as for the brokerage fee, ideally the range is 2.1% for amounts below 100,000 Kenyan shillings, And for amounts above 100,000 Kenya shillings, you get to pay 1.8% as the brokerage fee. That means when you're buying these shares, you'll be paying this amount of brokerage fee. Okay, that means for you to get 5,000 Kenya shillings as dividends, you're investing 41,440, and the brokerage fee will be 2.1% of that, which will be 870 Kenya shillings. And in total, you'll need to invest 42,310.24 for you to earn 5,000 Kenya shillings. For 10,000 Kenya shillings, you'll need to invest 84,242 Kenya shillings. And for you to earn 50,000 Kenya shillings in dividends, you're going to be investing 418,845 Kenya shillings. All right. Now, as we mentioned in the beginning of the video, I would like us to make this video more interesting so that we see if you invested maybe after the announcement of the dividends this year, that was in February 2024, whether you could have actually made money through the capital gains. And I want us to see that, and then we see after the payment of the dividends how the market has been doing. And I'm going to pull the graph for this, and here you can see this was on February 24th. That was during the announcement. So if you went in during this particular period of time, or you went in the same day that share was announced, it means that if you exited today, it would mean that you're going to be making losses from that account. But again, you can see afterwards it rose up to 397, and this was actually before the payments. The payment date was around June 25th, I guess. Let's see. It was around June 25th, yes, around here. And at that particular time, the price was 355. So if you exited at that particular time, you can see that you would have made losses in terms of capital gains. It would be capital losses, yeah, because let's say you bought at maybe 370 and now the price is 355. Okay, now again, you need to understand that you need to check when you're exiting the market to make sure that the time of exiting the market is not the price is not lower than when you went in the market. So make sure that you check that out and find out how the market is working. And I know you have to be patient enough for this market to go a little bit higher. And for someone who maybe joined with 370, if it went to 400 Kenya shillings, the price of one share went to 400 Kenya shillings, it would make more sense to them. Remember, you have earned through dividends, and now you would earn through capital gains if you sold at 400 Kenya shillings. That is the reason why I'm telling you, when you're going into such markets, this is a long-term investment. You want to stay long enough for you to even see the profits, or see that your capital has appreciated in value. All right. Let me know in the comment section, would you invest in BAT for passive income? If you want a full guide on how to buy and make money from shares in Kenya, check out my ebook in the description box. The book is going at 389 Kenya shillings. This is at a discount and it's for a limited period of time, so make sure that you grab your copy as soon as possible. Also consider watching this video on other best dividends paying companies in 2025 here in Kenya. Bye and happy